Hi. So I've been covering Alibaba extensively on my YouTube channel for close to 2 years now. And by extension, I have also been back holding this stock for more than 2 years now. Many will say throughout the entire history or length of time, especially during this entire tech crackdown episode. But I would just like to address certain discussions and interesting factors that I've came across because the more I study this business, the more interesting it gets. And especially for people that actually just look at Chinese tech as just one basket of stocks, um, many really cannot appreciate the magnitude, the scale, and the ability for many of these big tech companies in China to compound, specifically Alibaba and Tencent. The more I look at them, the more surprising it gets. But I do empathize with some of my viewers' concern. They're saying that, hey, Chiking, why are you so obsessed with a stock? Just look through the history of your videos uploaded on your channel. Alibaba, 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 Alibaba. Are you not tired of the stock itself? I think that's a very interesting observation. I mean, yes and no. I mean, I do cover Alibaba to a very extensive degree, but that said, I do talk about other stocks as well. I mean, if you were to really scroll through the entire timeline, there's Tencent here. I talk about someone doing options here, and then we also even talk about Tesla stock here. But that said, I think the funny thing is the YouTube algorithm is a very interesting creature. So most of the time, you get some kind of feedback, basically from the YouTube studio itself, saying that, oh, how your current video is performing as compared to the last 10 videos. And every time I talk about companies like Tencent or even Facebook, I believe I actually made quite a few Facebook videos as well, or meta platforms. It just doesn't get the clicks. And just look at it, TSMC, I get 3.6 thousand. And then for Alibaba content, I get like 6K. And then talking about Meta again, I get 2,000 views. So truth be told, it's not really what the creator wants to do. It's really what the audience want to watch. And in this case, it's quite a resounding feedback saying that they only want to watch Alibaba related content from me. But that said, I think in the long run, it's not really a very healthy relationship. Because the more I talk about Alibaba, the more it reinforces my cognitive bias, saying that, oh, how Alibaba is a great business, how a lot of all these political headwinds are just noises, and why the stock fundamentals and the stock price is essentially disjointed. So the more I talk about it, the more it kind of reinforces my conviction, and it's an unhealthy relationship. So that's it. I think moving forward, I'll try to explore a little bit more other topics, and if there are interesting businesses or interesting investment opportunity, I would also like to share it with the entire YouTube community itself. And after 2 years, I kind of garnered around 14,000 subscriber base. I thank each and every one of you for staying by. And in this video specifically, I will continue touting about how Alibaba is a great business. Just joking. I have a few news to actually cover, so just hang tight, sit tight, and just soldier on with me. And of course, don't forget to help smash that cute little like button. And of course, before I begin, I actually do honor transparency a lot, especially in the finance niche. And I would just like to provide you guys with an update because there have been allegations recently saying that I'm just essentially playing with Excel numbers. So for those of you who say that, oh, just because it's Alibaba has rebounded or Chinese tech has rebounded, that's why you're showing us your portfolio. No. If you were to really scroll back and see, I think for the last 2 years, I've been providing timely updates, at least on a quarterly basis. And you can see the second last update I gave was on the 2nd of October. Alibaba was essentially nosediving, don't worry. And if you were to look through every single position I have in my portfolio, this is just September Q3 of 2022, every single position I have, it's in the red. And was I scared of showing my position, saying that, oh, what if people don't believe me and I'm just a shill and I'm just a grifter, I don't know what I'm talking about. I mean, time will tell, but this is based on the October update. Every single line item was red. And then back in November, 17th, mid-November, I did another update. It's essentially a kind of exchange with another investor. And you can see that in this case, actually Tencent did kind of broke even. And even my TSM position or TSMC position also broke even. But that said, I think my major calls like Alibaba, KWeb, it's still deeply in the red. So based on a few of these update videos, a lot of people are saying that, oh, you're just showing us an Excel. who knows whether these positions are real or not. And to put a full stop to this entire discussion, so I'll be showing you two brokerage statements. It doesn't represent my entire position, but it's a majority of my position. So this is a screenshot from Tiger Brokers, and you can kind of map it to my current portfolio position. It should not have any discrepancy. If not, it's probably a few cents. But that said, this is essentially my current performance. My Alibaba, yes, you can see that my cost basis is around 138 because you didn't add into account other cost basis. I still have other brokerages in FSM1, in Interactive Brokers, and Moomoo platform. So this is just one of them. And on the second one, this is my Weibo platform. So in my Weibo statement, you can see that it's a lot more US focused. So I don't hold any of these Chinese tech names here. The closest to China is actually TSMC, but TSMC is Taiwan, and it's a controversial topic. So let's talk about it another time. So this is my TSMC position. It's up 30%, and yeah, Amazon, Google, they have been down, I think, at least 20 to 30%. It's because of this recent recovery. That's why it's a lot less rate, but the position is really, really very small. So in the grander scheme of things, it's really the Chinese position that really matter and that moves the needle in my portfolio. And you can see that most of them are in the green. So don't try to allege saying that, number one, it's not Excel figures. It's real money being put in the brokerage account. And number two, don't say that I only review my position because I'm in the green. I also review my position when I'm in the red. New year, new sign-up rewards. So Weibo's new welcome deal for the start of 2023 has never been better. So you can get up to $150 trading vouchers if you fund and trade your Weibo account today. So all you have to do is to sign up for a new account with the link below and deposit at least 2,000 Singapore dollars and execute one buy trade on a stock or ETF and one mutual fund, coupled with buying one option, and you will get to enjoy a whopping 10.5% return on initial capital. So for those of you who are still considering sitting on the sidelines, I don't know what's holding you back. So when the markets are slowly selling down and S&P 500 just keep grinding downwards, I think it's a good opportunity to start dollar cost averaging into the markets. And you can even get an additional $150 to do so. So Weibo prides itself on zero commission trading, and you can stop paying all the redundant commissions and use it to buy more shares. So recently, they've also allowed for a zero fee subscription and redemption of mutual funds on their platform. So don't let this opportunity slip away so easily. Link to sign up is in the description box down below. Thank you Weibo for sponsoring this video. So if you like this kind of transparency, remember to help. Just keep smashing the like button. And if you're in the dark team, remember to turn it white. Now, I think to go into the video proper, just to share a little bit about my certain discussion points and certain developments around Alibaba over the last 1 or 2 weeks. Because it was the Chinese New Year season, I kind of slack off a little. But there was this recent news, I don't even know why this is even a news, saying that one of the activist investor called Cohen, he essentially took a stake in Alibaba and he's pushing for more Alibaba stock buyback. So it is stated that Mr. Cohen, known as the meme stock king for helping ignite explosive rallies in GameStop Corp and others, built the stake in the second half of the year, the people said. So Mr. Cohen, with a net worth of over $2.5 billion and a portfolio of stocks, including Apple, as well as Wells Fargo's and Citigroup, first contacted Alibaba's board in August to express his view that the company's shares are deeply undervalued. I think it doesn't take a genius to figure out Alibaba was indeed deeply undervalued then. So Mr. Cohen has communicated to Alibaba's board that the share repurchase plan could be boosted by another $20 billion to roughly $60 billion. And there was this very interesting tweet in June. He actually tweeted that I have a crush on China. But I think the main focus is really this uneasiness in investing in China, and whether you think this is material, whether this is significant to the investment opportunity, or whether all these are noises. I made the assessment that those are noises, but many investors seem to disagree, which also explains why the valuation essentially went onto a free fall. But there's been several comments on a few of my recent videos asking me, what do you think of Cohen? Truth be told, when I first heard the name and when I first saw the headline itself, I don't even know who this dude was because, surprise, surprise, I know that you guys would have the assumption that many young investors, especially in their 20s, love cryptocurrencies and love all this meme stock. Sure, I do understand or I do know the entire episode around GameStop and AMC, but I don't really know all these active investors. So I actually took some time. I went to read a bit about Ryan Cohen. So it was essentially a 15 minutes article from Wall Street Journal talking about his entire endeavor, dabbling into Bed Bath and Beyond, GameStop, etc. I just wanted to point you to one a very interesting line that essentially jumped out at me. I think I highlighted somewhere. So it said that then in August, something unexpected happened. Bed Bath and Beyond shares began rallying as meme stock mania swept over the market again. Days later, when a new filing showed that Mr. Cohen's stake in the company had increased due to Bed Bath and Beyond's stock buyback, shares of the company actually surged higher. But as the stock climbed, Mr. Cohen began selling. So he earned a profit of about $60 million. I haven't been paying a lot of attention around this entire meme stock saga. When I look into it, it's ultimately a zero-sum game because you're not really investing into a business. In this case, many of these names like AMC, Nokia, BlackBerry, GameStop, Bed Bath and Beyond, many of them are on the brink of bankruptcy. If they're not at the brink of bankruptcy, they're also probably not high-quality compounders, which is why I haven't been spending a lot of time trying to understand this idea of community, short selling, and trying to squeeze the hedges out or things like that. It's really a Gen Z slang. So for Mr. Cohen to actually earn a profit of about $60 million, there is somebody on the other side of the trade that lost $60 million as well. So I don't like to engage in this sort of very weird kind of investing style. For those of you who managed to catch the top and time the bottom, kudos to you. But that's not really my game. So some of you asked for my comments, what do I think when Ryan Cohen essentially take a stake in Alibaba? To me, I'll just reply, no thoughts, head empty. So if you were to really look into the details, sure, you can say that Alibaba becomes a meme stock because the meme stock king decides to take a position. But Alibaba is not like many of these meme stocks with a small market cap or a high short interest. You can't move or you can't manipulate the market cap of Alibaba. It's $300 billion. This dude, I don't know how rich he is, but probably multiple billions. I think they did say that he has around a $2.5 billion portfolio. That's not enough to move a $300 billion market cap. So that's that. And even though he does have this title of being a meme stock king, you can see that in his main portfolio, he still have really, really relatively safe stocks or high quality stocks like Apple. And he also holds positions in Wells Fargo's and Citigroup. So can you really say that every stock he touches becomes a meme stock? Not really. I don't think Apple is a meme stock. But you get my point. I don't think it's influential enough to make any movement. So moving on, I think there's also this new update saying that Alibaba seeks to boost sales abroad with buy now, pay later. So this entire BNPL hype, or I don't know what you call it, a trend, is kind of taking everybody by a storm. But it's not really anything new, to be very frank. I think back in China, Ant Group, which is Alibaba's subsidiary, has already instituted this buy now pay later program for many of their shoppers since, I don't know, the last decade or something. So on Monday, a fintech company called Splitit Payments said it would join with Ant Group's companies Alipay to provide a delayed payment options to customers of AliExpress. So AliExpress is essentially the online marketplace operated by Alibaba outside of China. So the service will be first rolled out in Germany, Spain, and France, and could expand into international markets. And it enables individuals to pay for their merchandise in installments via their credit cards. So if you were to really just read the headlines, it's kind of phrased in a way or framed in a way saying that Alibaba is forced to adopt this entire idea of BNPL in the overseas market. But truth be told, I think it's just an additional option for the consumers. It's not really anything substantial. And it's probably not going to move the needle as well, because if you have to look at Alibaba's latest quarter results, look at international commerce retail. It makes up 5% of their total revenue. So to me, this buy now pay later development, it's also kind of considered noise. Now, let's move to something even more interesting. So, Seeking Alpha article by Mr. Bo. I think for long-time viewers, you guys should not be unfamiliar with Mr. Bo. So Mr. Bo has been an incredible figure in the entire Alibaba space because he's extremely famous for being an Alibaba bear, talking about many of these bear theses. And for those of you who have been asking me, hey, Chiking, why not talk about some of the bullish articles that are posted on Seeking Alpha? If the person is bullish and I'm bullish, it just reinforces my confirmation bias. So I think it'll be more value adding if I react to somebody that has an opposite viewpoint. Even though Alibaba has been soaring, at least for the last 2 months, and there has been really, really many positive developments around China, he's still holding his ground and saying that Alibaba is uninvestable. And he has been giving out a whole rating since, I don't know, back in October, November. And it has already essentially doubled, like 80 to 100%. And he's still saying that it's a whole rating. So I'm not really sure when is he going to give a buy, or even better, when is he going to give a sell rating. But in this case, let's see what he has to say. Alibaba stock has already greatly benefited from those developments, but there are reasons to believe that the upside is minimal from current levels. So there are several fundamental reasons to believe that despite all those developments, Chinese stocks and Alibaba in particular would continue to be uninvestable for foreigners in the long term. And I think because of people like that, it kind of strengthened my conviction that we probably haven't seen the top yet. Because when we are at the top, bears will also automatically turn into the bulls. So we need people like him to keep us grounded. But essentially, it's quite interesting that he says that Chinese stocks and Alibaba remains to be uninvestable, but he gives a whole rating. So why not give a sell rating, Mr. Bo? I'm not too sure. So let's get into the meat of the article. So first of all, Beijing's decision to fully pivot on its zero COVID policy could lead to the improvement of the country's consumer confidence. So at the same time, Xi Jinping's decision to start repairing China's ties with the West and adopting a more moderate approach on how to conduct relations with Washington and others also has an opportunity to ease the tensions between the great powers. Firstly, I would like to say that I'm actually a tad bit disappointed with the entire swift transition of the zero COVID policy. I thought that there would probably be better procedures in place. I actually expected much more because China actually had 3 years of head start to essentially prepare for an eventual opening. So that's just a side rant from me. However, there are several fundamental reasons to believe that despite all of those developments, they will continue to be uninvestable for foreigners in the long term. So there is a big change that is coming. So there is definitely a positive development for Alibaba, which in recent months experienced a decline in its core commerce business and decided not to report the sales from the Singles Day event for the first time as consumer confidence created. I would like to say that this is not really a fact. Okay, the first part is a fact, but the second part is an opinion. So you have to kind of be discerning of what is a fact and what is an opinion. It's true that Alibaba kept mum of the entire Singles Day event. But that said, whether is it because of consumer confidence cratering or other reasons, nobody knows. So that is Mr. Bo's opinion, that because consumer confidence cratered, that's why they didn't report the numbers. So even though Alibaba opted not to disclose the final sales tally of its Singles Day festival, but they did say that the results were in line with last year. However you want to interpret in line, I will presume that it's probably flat, growth year on year. So I don't think that consumer confidence essentially cratered, because by cratering, I will presume that it's at least a negative 5, 10, 15, 20%. God knows what the number is. But if they dare say that it's in line, I don't really expect horrendous results per se. So on top of that, he then started discussing about the appointment of a former ambassador of China to the US, which is Qin Gang, and some of the mumbo jumbos of some political discussion. I'm not going to get into it because, truth be told, trust me, Mr. Bo don't know what he's talking about, and I probably don't know what I'm talking about as well. So let's not get too involved in this entire political shenanigans. So a potential improvement in relation thanks to Beijing's new foreign policy could ensure that the threat of delisting would be fully neutralized. So this is the first point. He's saying that a positive political development between US and China, if the tension is being eased, the idea of delisting might be off the table. And on the second part, especially this entire idea of a chip ban, a better relationship between the US and China might also alleviate some of the pressures from the chip industry, especially for those of you who know that there's a latest export control rules implemented by the White House. So like I said, we don't know whether the China-US relationship is going to be neutralized with this new appointment. But yes, I do agree that there is certain headwinds around the two major economies today, and the delisting issue, the chip ban and whatever, many of these are narrative building, by the way, because he probably don't have data to support whatever he's talking about. So let's just presume that those are noises. And I would also presume that many of these high-tech companies, whether is it Tencent, Alibaba, Meituan, whoever of the likes, or even ByteDance, there's this Chinese idiom called 上有政策,下有对策. They probably have the ability to kind of maneuver many of these new export controls or this new heightened tension. I'm confident that they can find a way out of this. So now, can Alibaba's business actually recover? A couple of months ago, the consensus was that Alibaba's revenue would decrease by 3% in financial year 2023. Then the current consensus is that the company's revenue would now increase by 2.5% for the same period. However, even though the local government are aiming for an over 5% growth rate in 2023, such a growth rate is still lower in comparison to pre-COVID rates. Add to this fact that the home prices in China continue to decline despite various stimulus package, while the health system could be in a state of collapse due to the sudden change of health policy, and it becomes obvious that even an over 5% growth rate is not guaranteed in 2023. And at the same time, China's digital yuan continues to gain ground with the help of China's central banks and slowly takes over Ant Group's Alipay. It is only a matter of time before the company won't be able to rely on profits generated by Ant Group to improve its bottom line performance. I think Mr. Bo really has a flair of storytelling and narrative writing. So sure, he's taking bite-sized information here and there, saying that, because of the new policy stance, the healthcare system is going to collapse. And to add on, there's this property collapse. And to add on, there's this digital yuan thing going on. And to add on, Ant Group is probably destroyed after the entire tech crackdown. And then he just lumps everything together and say that, Alibaba is a goner. It's a very interesting observation. I'm not saying that it's untrue because I don't have the data or statistics at the back of my hand as well. But if he wishes to make such an assertion, he has to draw the link for us and not just jump here and there and not just say that, because China has an extremely bleak outlook, therefore all the companies in China is going to suffer and all the companies are going to cease to exist and go to bankrupt or something like that. But it's still very interesting. But I'll just like to say that, firstly, consumer confidence, this myth of consumer confidence, I've already debunked it in one of my previous videos. The US consumer confidence is also at an all-time low. So does it mean that the entire US economy and majority of these companies are just going to cease to exist? Evidently not. So on the second point about this various stimulus package, for those of you who have been following, most of it has been targeted to many of these developers and not really like the US kind of stimulus where they just give broad-based money handouts to people to essentially try to stimulate the economy. That hasn't been what China was doing, which also explains why it has been largely ineffective and why house prices has been coming down. But let's not forget what was the initial objective of having the 3 rate line policy. The government wanted to control house prices. So why would you want house prices to continue climbing up when the government's objective was to cool it down? So I honestly don't get the logic there. And thirdly, about this entire digital yuan thing, Ant Group's Alipay is actually one of the pioneer partners with the Chinese government to essentially institute and to execute this entire digital yuan business or digital yuan new norm. So I don't exactly know what he's talking about. And on the last part about this entire idea of relying on Ant Group to generate profits. So for those of you who have been following Alibaba, if you want to check how much Ant Group actually contributes to Alibaba's bottom line, you can just do a Control F on many of their earnings document, just Control F Ant Group, and you'll find this portion where they essentially lay out how much Ant Group actually contributes to Alibaba's bottom line. And for those of you who are lazy, I essentially populated the figures all the way back from 2019 to kind of give you some color into understanding how much Ant Group essentially contributes to Alibaba's business itself. So everything here is denominated in renminbi, so there is no conversion issue. And just bear with me that I kind of parked Ant Group's figures wrongly. It shouldn't be under the revenue column. This is actually the profits. Because if you have to look at it, this is actually the share of profit or loss to the equity method investees and not really revenue per se. So if you have to really follow my cursor here, if you look at Ant Group's growth, it has been exponential, and exponential is actually an understatement. You can see that in 2020, doing a year-on-year comparison, they essentially grew by 136%, and then 48%, 38%, 21%, and then there was this recent slowdown because of this entire crackdown problem, and they need to recapitalize and they have to be governed like a bank and stuff like that. So if you have limited oversight from the regulators, especially like a business like Ant Group, they are able to leverage infinitely, and that is a crazy system to be in. And which is why, as a shareholder, I'm sad that they are unable to continue leveraging infinitely. But from a country's perspective, I can understand why the government wishes to crack down on them. But I think just to provide some color, you can see that Ant Group's profits essentially fell off the cliff. On a year-on-year comparison, based on Q1, it's down 17%, and based on Q2, it's actually down 63%. But if you have to compare in terms of percentage-wise how much they're contributing to Alibaba's bottom line, Alibaba, in terms of income from operations on a consolidated basis, this is around $25 billion, and Ant Group is around $3.7 billion. So that's give or take probably around 15%. In the latest quarter, 2.3 compared to 25, it's probably less than 10%. So it's going to be a smaller and smaller percentage, and I can understand where Mr. Bo is coming from, because presumably speaking, if you look at how Ant Group has been contributing to Alibaba's bottom line in the year of 2021, stretching into 2022, so 5.8 billion out of 7 billion, that's at least 60%. I think this is a relatively distorted figure because, as we all know, Alibaba's income do experience some sort of fluctuation because of the writing up and down of their investments. So a lot of people don't really focus on the net income figure. And for those of you who don't know, Alibaba currently has a PE ratio of more than 120 or something like that. So it's not really a very accurate figure if you just look at earnings alone. So many people tend to focus more in terms of free cash flow and cash flow being generated by many of these operations. As we all know, Ant Group wasn't a sustainable business to begin with. As a shareholder, at least from a long-term perspective, I would be pretty concerned if Alibaba just keeps continue leveraging and China just implodes on itself. Now, in terms of concluding this entire article, Mr. Bo says that his latest DCF model, which was created after the Q2 earnings results were revealed in November, showed that Alibaba's fair value is 115.71 per share. So the latest appreciation of Alibaba shares already helped the business to reach that level. And as a result, it appears that there's no major upside going forward. I think I'd just like to caution every one of you, especially all you finance nerds that have complicated Excel models, just be clear that there really isn't one intrinsic value. Doesn't mean that your model spits out 115 means that Alibaba at 115 is, it's at fair value, I shouldn't buy anymore. It's usually a range, and you have to be fairly confident of your assumption of saying that, to actually make a public statement saying that you are confident that Alibaba is at 115. So I don't know where he get his confidence from, but based on my own fair value calculations, at least in the next 3 years or so, in 2026, there is still pretty more upside from here. So I don't think we have reached fair value yet, but he can have his own opinion and I can have my own opinion. That's why the market is such a fun place to be in. Now, what's next? However, as I've noted numerous times, the movement of Alibaba stock depends on the mood of officials in Beijing and Washington DC. Not really, that's in the short term. And in the short term, it's not really dictated by the two countries. It's more so dictated by market participants and people going in and out of the stock. It's just demand and supply. Doesn't take a genius for you to figure it out. But he did explain a lot in terms of, add to this, China's population decline, the potential invasion of Taiwan, the VIE loophole that can be closed anytime, the lack of capital inflow into Alibaba stock, and the news that the Cybersecurity Administration acquired golden shares in some of its business, and it becomes obvious that Alibaba is uninvestable for a long-term investor. I'm going to categorically say here that I totally disagree with many of his assumptions and many of his discussion points here. I have a great deal of time to wait it out. Let's see in 3 to 5 years' time whether any of this is going to play out, especially this entire idea of a potential invasion of Taiwan. So I'm putting my money where my mouth is at. I'm still holding onto the stock. Let's see whether many of these discussions about VIE, population decline, invasion of Taiwan, capital inflows by major institutions, whether they're going to come into fruition or not. So time will tell. Many of these discussions are not company specific, and you can see that many investors around the globe, all of us are probably obsessed by this. Basically, whether Chairman Xi and the government is going to support the economy, whether the tech clampdown, are we at the end of the tunnel or not, whether there's additional COVID lockdowns, whether there's a fear of ADR delisting, and being IPO, US tariffs, the US-China relationship, and whether there are institutional investors going back to China. At the end of the day, let's not forget that when we are investing, we are buying into a piece of a business and we are investing into the company. We have to have an owner's mindset. And many of this discussion is revolving around the company and not really the company specifically. For long-time viewers, especially for those of you who essentially consume my content religiously, you know that I'm relatively concerned about this entire ByteDance invasion into the live streaming and e-commerce space. And for now, I don't really have a lot of data to kind of prove otherwise, but it does seem like competition is heating up and Alibaba is kind of trying to fend off competition, but we still need time to see how they're going to grow in this entire space. And this is what I should be concerned about as an investor, not really all this VIE, US-China tension and all this kind of nonsense. So I think just to circle back, to give credit where credit is due, because I actually did sound kind of bearish, especially when I always talk about ByteDance, specifically ByteDance as a competition to e-commerce, which is Alibaba, and also to video platforms and short-form videos to Tencent as well. Giving credit where credit is due, Alibaba has been a very high quality compounder by being able to allocate capital effectively and by being able to build out all these different subsidiaries. And just a recent tweet from Ruima, I think just this is essentially a survey by one of the VC, essentially trying to sieve out what's the private valuation of many of these private companies. And if you were to look at the top 10, I know some of you might not be able to read Chinese. Just know that if this is 3,480, 3,480亿美元, so in English, this is $348 billion. And in the top 10, you can see that 3 belongs to Alibaba. This is Ant Group. Ant Group is currently valued at around $150 billion. Ali Cloud is valued at around $123 billion. And Cainiao, which is their logistics arm, is valued at around $300 million. So Ali Cloud and Cainiao, these two is wholly owned by Alibaba specifically. And Ant Group, Alibaba actually owns a 1/3 stake. So if you were to just add them up, like just add the individual companies up, and assuming that the valuations are accurate, but just a side note, it's probably not accurate because these are private valuations and the private market is pretty illiquid, and I don't know how they are being valued. Usually it's based on the last rounds of capital that they raised from. But that's besides the point. If you look at it, 150 billion, you divide by 3, that's $50 billion. This is 123 billion, so that's 173 billion, plus 300 million. So that's around $200 billion in terms of valuation, just on this 3 business alone. And if you look at Alibaba's market cap today, it's probably closer to 300 to 350 billion. So yes, out of the $350 billion, 200 billion is based on this very rough valuation of Ant Group, Ali Cloud, and Cainiao. And tell me that they're not a good capital allocator. With that, I'll see you in the next video, but more importantly, I will finally see you on the moon. Goodbye!